what are the conditions, what are the types of underwriting, firm underwriting, conditional underwriting, and also marked application, unmarked application. All these things we discussed in previous class, and we worked out the problems also. Few problems we worked out already, and so up to third problem we worked out in previous class. So next problem. Just refer the next problem, illustration 58. Just refer the next problem, illustration 58. Just go through the question. Just go through the question. I hope all of you having some idea about underwriting of shares and debentures, and you know the workings already what we discussed in previous class. So this is the continuation of previous class. I'm not explaining again the basics. So we will directly go to the problem. So H Limited issued 20,000 shares were underwritten as follows. A is one underwriter, B is one underwriter, C is one underwriter. So A 12,000 shares are given for underwriting. B 5,000 shares is given. C 3,000 shares are given. The underwriters made application for firm underwriting. These underwriters also agreed for firm underwriting. Firm underwriting means you know that definitely they have to purchase these shares. Whether the public is purchasing or not purchasing, whether it is an oversubscription or undersubscription, whatever the scenario, these shares should be purchased only by underwriters. That is firm underwriting. The total subscriptions excluding firm underwriting but including marked application were for 10,000 shares. The marked applications are 2,000, 4,000, 1,000. So 10,000 shares subscribed by the public. Out of that, some portion is marked, some portion is unmarked. This is what about this question. So we will directly work out the answer. We'll directly work out the answer. Please, all of you take your notebook. All of you take your own notebook, and start work out yourself. Don't wait for. Don't wait for. Don't wait for the answer. You work out yourself. I'll also start working out. Okay. Please work out yourself. Please work out yourself. So what is the format? Gross liability. Then underwriters A, B, C. Okay. What is gross liability as per the question? As per the question, what is the gross liability? 12,000, 5,000, 3,000. So 12,000, 5,000, 3,000 minus firm underwriting minus firm underwriting. What is firm underwriting? Is given in the question. 1,600, 600, and 2,000. So if you minus this minus this, you'll get this much. So after minusing firm underwriting, this is the answer. Then again minus what? Again minus marked application. Marked application directly available in the question. It's available in the question below. A 2000, B 4000, C 1000. A 2000, B 4000, C 1000. So this minus this. After deducting marked application, C is getting 0. What to do, sir? I think you have not attended the previous class. That's why this doubt. Or else you would have forgotten the previous class. What we have to do? Just I am asking this question to other students who is attending. Just share your views. Someone is asking is getting 0 for C. What to do? That is the question. This one is 0. For C, we are getting 0. What to do? Because total application received is how much? Total application received is how much? Total applications received is how much? 10,000. Then minus 7,000 application for what? Marked application. Marked is 7,000 application. Then equal to 3,000 is unmarked. 3,000 is unmarked. Thousand, 10,000 minus 7,000 equal to 3,000. But I will write like this: 10,000 minus 7,000. Sorry, 7,000 equal to 3,000 unmarked application. What we have to do with this unmarked application? what we have to do this unmarked application. Hope all of you present there. Just let me know your doubts. What we have to do with this unmarked applications. This unmarked application can be allotted to A, B and C. Whether can we allot this unmarked application to C or not? Tell me. Whether is it required to allot unmarked application to C? I am asking a question. Whether we have to allot this 3000 unmarked application to C or not? Yes or no? Directly we can allot to A, B, or we have to allot to C, and later on we have to allot to A, B. I am asking. So, what is the meaning of 0 actually? What is the meaning of 0 first of all? What is the meaning of 0? 0 means liability is already satisfied. C does not have any further more liability. Correct or not? This gross liability is 3000 and firm underwriting already 2000 deducted, balance 1000, marked application deducted. There is no further liability for C. So, there is no need to allot this unmarked application to C again. Instead of allotting this to C, we can directly allot this 3000 to A and B in their ratio, in their gross liability ratio. What is the A and B gross liability ratio? 12,000, 5,000. That is 12:5. 12:5 ratio. Okay? Gross liability ratio. So, this can be allotted into 12:5. How to allot that? Equal to 3000 divided by 12 plus 5 is 17 into 12. 2117.647. Is it so? 12:5 only, na? So 3000, 12:5:3. 3000 So this is why I did this. You should not deduct the unmarked application first. You should not deduct the unmarked application first. Rather, you have to deduct the firm underwriting marked application. Then, if anything is pending, unmarked application you can share. Don't go by insured material this thing. Okay? You got it or not? What I am saying? All of you understood. You go by this format 2118. So 2118. So 3000 minus 2118. 882. Okay. Again there is an excess deduction that we will do. 8400 minus 2118 6282. 400 minus 882 482. So here already 0. Forget about C. Here again this B is having some excess application of 482. C is already having 0. B is also having excess application of 482. This 482 can be directly transferred to A. This 482 can be directly transferred to A. So that C and B 0. Again if you deduct 6282 minus 482, 5,800. 0, 0. Okay. Plus firm underwriting compulsory subscription. Compulsory subscription. What we deducted first, that we have to add here. 1,600 and 600 and 2,000. This is what net liability. So net liability is 7,400 plus 600 plus 2,000. What is the institute answer? Institute answer is also 7,400, 600, 2,000. But you follow this method. This will be the correct method. Okay? Net liability. You first deduct the firm underwriting, then marked application. If anything is pending, then you allot the unmarked application. Understood this problem? This problem understood? Any doubt in this problem, you can ask me. Yes, sir. Yes. From Sanju Shweta. So we will move to the next problem then. Better you work out now. You please work out. Take just 1 or 2 minutes in your notebook. Complete this problem in your notebook. Complete this problem in your notebook. Take 1 or 2 minutes. Please work out this problem in your notebook. Please work out. We'll move to the next problem. Just let me know once you completed. Completed. Finish. Completed. So we'll move to the next problem. Second problem. I'm working out the second problem. So why I'm working out this problem specifically? Because there is some new learning on this problem. So what is those learning? So we'll go through the question first. A joint stock company resolved to issue 10 lakh equity shares. of 10 each at a premium of 1 per share. 1 lakh of these shares were taken up by the directors of the company, their relatives, associates, and friends. The entire amount being received forthwith, the remaining shares were offered to the public. Their entire amount being asked for with applications. So totally 1 lakh, 10 lakh shares they are issuing, out of which 1 lakh shares their promoter itself purchased, relatives and promoters. So balance 9 lakh only available for public issue. That 9 lakh only may be awarded for the underwriters also agreement. So the issue was underwritten by PQR for a commission at 2% of the issue price. Okay. 65% was underwritten by P. Q is 25%, R is 10%. The firm underwriting is follows. This is what important, this point, this firm underwriting. P 30,000 shares, Q 20,000 shares, or 10,000 shares. So the underwriters were to submit the unmarked application for shares underwritten firm with full application along with the members of the general public. So what they are saying is firm underwriting is 30,000, 20,000, 10,000. Firm underwriting means what? Definitely underwriters should purchase the shares. So we will deduct separately that amount. But in this problem, what happens now? This firm underwriter, that is underwriter, what they did know, along with the general public, they submitted the application. Firm underwriting application they submitted along with the general public. General public means what? General public will purchase the unmarked application, not marked application. Unmarked application is purchased by the general public in an open manner. Along with that general public itself, they submitted this firm underwriting shares also. So that is only the difference in this problem. Meaning, normally we will deduct this firm underwriting separately. Separately we will deduct. But in this problem, we should not deduct separately. Rather, we have to deduct along with the unmarked application. Because that unmarked application includes firm underwriting also. That is what the new learning. All other things, same. All other things, there is no new things. Unmarked application means general public directly purchasing from the company. But this underwriters, what they did know, along with the general public, they submitted this application. This firm underwriting includes this under the unmarked application. That is what they are learning here. This firm underwriting includes under the unmarked application. Along with the general public, this firm underwriter also went and submitted the application form. Okay? Understood? All of you? All other things, same. There is no new learning. This is what we have to account it differently because of this reason only. Normally, marked firm underwriting we have to deduct separately, but in this problem we have to deduct along with the unmarked application because unmarked application includes firm underwriting. Okay? Understood the meaning? Shall we proceed further? Shall we proceed further? Yes, sir. How to work out this? That I will show you. Explain once again. That's what this normally firm underwriting means. You know that firm underwriting means it is purchased by underwriters. They have to definitely purchase the shares. That is the condition. Then what we will do normally, firm underwriting we will deduct separately. But in this problem, what happened? This underwriter firm underwriting portion, how they purchased? No, they went along with the public. As a public, they went and they submitted their application form. So in the unmarked application, this firm underwriting applications are included. So we need not to deduct separately this firm underwriting because that the firm underwriting is included in the unmarked application itself. That is the reason this problem is having some twist. Otherwise, all other things same. Okay, I'll work out the problem. Just go through the problem once again. I will share the desktop. Please wait. Just go through the problem. So as per the question, 10 lakh shares minus 1 lakh shares equal to 9 lakh shares. Okay. This 9 lakh shares only available to public. How this 9 lakh is divided between PQR? P 65 percentage, Q 25 percentage, or 10 percentage. So 9 lakh into 65 percentage, 9 lakh into 65 percentage, 5 lakh 85,000. 9 lakh into 25 percentage, 2 lakh 25,000. 9 lakh into 10 percentage, 90,000. Okay. So this is P, then Q, then R, gross liability. Okay. Minus. Normally we will deduct the firm underwriting first. For this problem, we can work out differently. So next to firm underwriting, we will deduct the next to firm underwriting. What we will deduct actually after the firm underwriting, we will deduct the marked application. That we will deduct first. Why? Because firm underwriting is included in the unmarked application. That is what question says. Firm underwriting is included in the unmarked application. Refer here. P 30,000 shares, Q 20,000 shares, or 10,000 shares. Underwriters were to submit unmarked application for shares underwritten firm with full application money along with its members of general public. That is why underwriters are submitting their application, that is firm underwriting application, along with the general public. So now why I am deducting separately? Why I am not deducting separately means I don't know. Underwriter application is also included in the unmarked application. Like a general public, he purchased the shares. So I don't know because marking is not happened. So out of the total unmarked application, this firm underwriting is also included. That is the assumption. So minus marked application. Marked application is available in the question. See below 1,19,500, 57,500, then 10,500. 1,19,500, 57,500, then 10,500. So I am deducting this one. Then minus unmarked application. This includes unmarked application includes firm underwriting also. Because this underwriter, what they did, they purchased the share along with the general public. They submitted their application form along with the public also. Okay. So what is unmarked application? Total unmarked application. Total thing is how much? See in next page they given the unmarked application thing. So unmarked application is 7 lakh shares. This 7 lakh shares includes firm underwriting also. This 7 lakh shares includes firm underwriting also. So 7 lakh can be shared between PQR. 7 lakh can be shared between PQR. 7 lakhs can be shared between PQR in the ratio of 65, 25, 10. 65, 25, 10. 65, 25, 10. So 7 lakhs into 0.65. Then 7 lakh into 0.25. Then 7 lakh into 0.10, 70,000. What happens? 10,500, 7,500, 9,500. In Q there is an excess application. In Q, under the Q there is an excess application because it is in minus. Correct? Because it is in minus. So this excess application should be shared between P and R in their ratio 65 is to 10. So 7,500 divided by 75. 75, why 75? 65 plus 10, 75 into, for 65 how much? 65,000. So balance, sorry, not 75,000. It is 7,500. So 6,500. Here it is 0. It will become 0. How? 7,500 positive. Here balance 1,000. Okay? This is in negative. This is in negative. So 10,500 minus 6,500. Understood? Understood? Now you have to add the firm underwriting. If you want, you can add, or else you can directly pass an entry. Because firm underwriting is included in the unmarked application. So net liability is this much only in this problem. Why firm underwriting is not included? Because the firm underwriting application is included along with the unmarked application. Company does not able to differentiate between unmarked application versus firm underwriting. Because this underwriter, what they did, they submitted the unmarked, the firm underwriting application along with the unmarked application. So net liability is this much. Net liability is this much. Issue price how much? Issue price how much? So given in the question, issue price is 11. That is 10 plus 1, 11. So total liability, net liability is 4,000 into 11, 44,000. Here it is nil, 93,400. This is one thing. Up to this, any doubt you can ask me. Please, up to this, any doubts you can ask me, so that I will continue further. We have to add underwriting. We have to add firm underwriting normally. But in this problem, we will not do it. Why? Because it is included along with the unmarked application. So we don't know how much is exactly firm underwriting because it is not also marked. So that we will calculate along with the general public. We will pass an entry along with the general public. Any doubts? Can I proceed further? Can I proceed further? Okay. So first step is over. The question is the question is they asked 2 to 3 things. How to get 7 lakh? What 7 lakh actually? Unmarked application. Total 7 lakh. 7 lakh means what? Unmarked application total is 7 lakh. What you are asking? Okay. So what is the next step? What is the next step? First thing is they are asking us to calculate liability, and the next thing is they are asking us to calculate the commission, and the last thing is they are asking us to calculate the journal entries. So commission payable. Commission is paid for what thing? Commission is paid for what actually? Commission is paid for what? Commission is paid for doing the agency job. Whether you purchase, don't purchase, whether it is undersubscribed or oversubscribed, whether it is a firm underwriting or other thing, I will pay commission for the overall gross liability. Commission is paid on gross liability by applying the issue price. So commission is 2%, na? Commission payable at 2%. So equal to commission payable at 2%. So what is the thing? How to calculate that? What is the portion of fee? This portion is how much? What is this gross liability? 5,85,000. 5,85,000 into 11 into 2%. Correct? Yeah, correct. Then, what is the next thing? 2,25,000. 2,25,000 into 2,25,000 into 11 into 2%. 49,500. Then what else? What about the third one? 90,000. 90,000 into 11 into 2%. 19,800. This is commission payable. Then this is what we have to receive. Receivable is this much. Payable is this much. Ultimately payable, net payable by company, net receivable to the company. Payable is how much in this case? Commission is greater than the amount to be collected. So we have to pay to the P. Here also commission is greater than the amount receivable from that guy. So 49,500 directly. Here what happens? No, he has to pay 93,500, but the commission is only 19,800. Here it is receivable to the company. Where? Here. Because 93,500 that guy has to pay, or has to pay 93,500 to the company, but the company has to only pay 19,800. So 93,800 93,500 minus 19,800. 73,700 to be received from that guy, called R. Okay? Please complete up to this first. Please complete up to this. I will proceed further. Please complete up to this. Please complete up to this. Please complete up to this and let me know. I will proceed further. Completed from Kavita. Underwriters purchased how much? Share is how much? Net entry is what happens? Journal entry is what happened? In journal entry, totally 9 lakh shares. Total 9 lakh shares, correct? And minus underwriters. Underwriters purchased how much? Forget about firm underwriting for this problem. Firm underwriting is included in the unmarked application. So, underwriter's share is how much? Net liability 4,000, 8,500. 4,000 minus 8,500 equal to 12,500. 12,500. Underwriter's share is 12,500. So, balance 9 lakh minus 12,500 equal to 8,87,500. Shares is purchased by the public. In this public, this firm underwriting also included. In this public, what is included? Firm underwriting also included. In this public, if you see the question, here the firm underwriting is there, no, 30,000, 20,000, 10,000. 30 plus 20 plus 60, sorry, 10. Total is 60. This 60,000 is also included in this 8,87,500. Got it? This 60,000 is also included in the 8,87,500. Okay? Now I will pass an entry for this 8,87,500 separately. Bank account debit 8,87,500 into 11. Total issue price is how much? 11 only, na? 8,87,500 into 11. 9,76,000. How we got 12,500 for underwriters? Is there in our workings. Ultimately, net liability is how much? Net liability. Net liability, you see, 4,000 for P and for R 8,500. 4,000 plus 8,500 equal to 12,500. That is the net liability for P and R. So underwriters 12,500 deducted. Balance 8,07,500. This into this one. I am passing one single entry, no, double entry I am not passing, singly I am passing. So bank account debit to 8,08,500 into 11, 9 lakh 2 share capital, 2 share premium. So equal to 8,87,500 into 10 equal to 8,87,500 into 1, 10 plus 1. If you add all the two, you will get 9,76,000, 2,000 minus. See, refer my cursor here. 9 lakh, if you add sum you are getting here total. Just go through here. 9,76,000 to 97,62,500, not 9,76,000. 97,62,500. First entry over. First entry, any doubt? Ask me. Please, first entry, any doubts you can ask me. First entry, any doubts you can ask me. Please, if you have any doubts in first entry, you can ask me. This is what new learning here. All other things same. This is what different here. So due to commission payable. So next entry will be what is next entry? Share application totally they allotted for P and R. Underwriting commission. Okay. I will pass next entry. Commission payable entry. Commission payable entry only, not paid entry, only payable, because this payable entry we know already. While issuing underwriting itself, we know what we are going to pay. Underwriting commission account, debit. What is the total underwriting commission payable? Add all the things. 1,98,000. 1,98,000. 2 P. Then 2 Q. Then 2 R. 2 PQR. What is the amount there? 1,28700, 49,500, I think 9,800. Correct? Yeah, correct. Add all the things, you will get 1,98,000. This is what we have to pay. This is what we have to pay to these guys. But what happens? Here? Net receivables versus net payable. For these two fellows, we have to pay, Leah, after adjusting the shares. After adjusting the shares portion, for these two fellows, we have to pay this much. 84,700, 49,500. Here we have to receive this much. So I will pass the entry for that also. I am paying to P. Account debit. Q account debit. To bank. How much? 84,700, 49,500. 84,700, 49,500. 1,34,200 I paid to these guys. Balance for R has to pay to us. Bank account debit 19,500. How much? Sorry, 73,700. R has to pay to us 73,700 to R account credit 73,700. Okay. Adjustment is over. Commission adjustment. Now finally, subscription of shares by these fellows. Subscription of shares by these fellows. Subscription of shares by these fellows. So what is the amount? Bank account debit. Bank account debit. How much? How much money we needed from these guys? How much money we needed from these guys? Here 44,000 into 11. 44,000 into 11 is how much? 44,000 into 11. 4,84,000. Here 93,500 into 11. 1,02,800. Sorry, 10,28,000. 500. Correct? I think wrong. 4,000 into 11, 44,000, 8,500 into 11, 93,400. So add all these two. 44,000 plus 93,500, 1,37,500 rupees. Let me check with the answer. This entry only I am going to trying to say now. So P account debit is this much 44,000. R account debit is 93,500. For that we have to pass one entry, not this payment entry and all. So P account debit, Q account debit 44,000. Then how much? 93,500. 2. Share capital. 2. Share premium. Share capital, what is the share capital? It's nothing but 4,000 shares plus how much? 4,000 shares plus 8,500 shares. 4,000 shares plus 8,500 shares. 12,500. 12,500 into 10. 12,500 into 10 is how much? 1,25,000. Here 12,500 into 1. 12,500 into 1. 12,500. 1,37,500. 1,37,500. Till this problem is over, you can ask me your doubts now. Wherever you have doubts, you can ask me. I am ready to explain. From first entry to last entry, if you have any doubts, you can ask me. Please complete otherwise the problem. Any doubts? Any doubts? Let me know if you have any doubts. Otherwise, please complete the problem quickly. We will move to the next topic.